let's talk about the next money market instrument, commercial papers. Commercial paper is a low cost alternative to bank loan. It is a short term unsecured promissory note. So it is a short term unsecured. Let's suppose the commercial paper which is being issued by the corporate and financial institution, that corporate or financial institution goes bankrupt tomorrow. You won't be getting your money back because it is a short term unsecured, right? Not secured. Promissory note, they're just writing the promise that we will repay you this amount after a while. That's promissory note issued by corporate and financial institution at a discounted value on face value. So this is basically right, uh, you know, the money market instrument that we just discussed, and where treasury bills, where it is they are issued at discounted value and redeem at face value. They're usually issued with fixed maturity period between 1 to 270 days and for financing of accounts receivables, inventories and meeting short-term liabilities. So these are the purposes. So let's discuss this with the help of an example. For example, a company has receivable of rupees 1 lakh with credit period of 6 months. It will not be able to liquidate its receivable before 6 months. So if a company is going to receive that amount of 1 lakh rupees after 6 months, they need some money to run their businesses. Now, uh, what they can do, it can issue commercial paper in form of unsecured promissory note at discount of any percent. In this example, 10% on face value of rupees 1 lakh to be matured after 6 months. The company has strong credit rating and find buyers easily. The company is able to liquidate its receivable immediately, and the buyer is able to earn interest of rupees 10k over a period of 6 months. So what basically happening in this example is the company will be receiving 1 lakh rupees after 6 months, but they are in dire need of funds, right? So what will they do? They will issue a unsecured promissory note, and they have a good credit rating. So let's suppose, any of you guys or me, I go and I said, okay, I will buy this promissory note, and I will pay you 90,000 rupees right now because I will pay them at discount value, right? So I will get this. I will get that promissory note now after 6 months, whenever the 6 months or the time period, whenever it does get over, I will get 1 lakh rupees. The company will pay me 1 lakh rupees, and then I will be able to earn rupees 10,000 over a period of 6 months, right? So the company is able to liquidate because the company will be able to receive that 1 lakh rupees. The time period is over now. Company has received that 1 lakh rupees, and I will be able to get my 1 lakh rupees now and earn 10,000 rupees as interest value. And I think most of you must have realized that there are not a huge amount of money that being earned. The interest is quite normal. So that because that what I've been saying, in money market instrument, it is secure market and very low risk market. So the returns are not that fascinating, right? So this is about commercial paper. Now the next example is banker acceptance. So this is basically, if you have read about the bills receivable concept in your accounts, in your accounting in 11th class, then you must be very much clear with this one. So I think we can ignore this one and move ahead with important things that we have to discuss. So one of the important point that we should discuss and finish the money market with, that an individual player cannot invest in majority of money market instruments. Hence, for retail market, money market instruments are repackaged into money market funds, right? So, an individual player like you and me cannot invest into many of the money market instruments. What we can do is, for retail market, it is open. So, money market instruments are repackaged into money market funds. So, these are also known as money market funds. So, this is all about money market. I hope everyone who is watching the video till now, those who have watched the video, they are pretty much clear with this money market concept and the money market instrument. So if you're liking the content that we are providing, please do leave a like, and you know write about anything that you feel about the lectures or the content that we are providing in the comment section, and do hit the subscribe button as well, because you will get notified whenever I come with a video on UGC NET Paper 2 Commerce. And right, your examination form for UGC NET are also out, and I hope that most of you, those who are watching this video, are filling up the form and you know preparing for the examination, and will be sitting for the examination. I think the examination is in June, right? So I hope you were pretty much, great at your practice. Okay, now so we'll continue with capital market video, right? We have already discussed money market and we'll discuss capital market. So in my video, I've been discussing this and I've been repeating this that while we're talking about money market, you have to remember this that all those money market instruments have the maturity or the liquidity or the maturity period less than 1 year. While we are talking about capital market, in this it is defined as market dealing in medium and long term funds, right? So this is about capital market. It is an institutional arrangement, right? So it is an institutional arrangement for borrowing and long term borrowing medium and long term funds which provides facilities for marketing and trading of securities, right? So we're talking about capital market now. It is an institutional arrangement, so you have to remember this is an institutional arrangement for borrowing medium and long term funds, right? In money market we are talking about short term funds, in capital market we are talking about medium and long term funds, right? So it constitutes all long term borrowings from banks and financial institutions. So what all comes under capital market is that it constitutes all long term borrowings from banks and financial institutions, borrowings from foreign markets, and raising of capital by issue various securities such as share, debts, debentures, and bonds. Right, so we're talking about long term borrowings from banks and financial institutions. In this, so we can borrow from foreign market as well, and we can raise capital by issuing various securities such as share, debentures, bonds, etc. The market where securities are traded is known as security markets, and it consists of two different segments, namely primary and secondary market. So the primary market deals with new or fresh issue of securities and is therefore known as new issue market, whereas the secondary market provides a place for purchase and sale of existing securities, and it often termed as stock market or stock exchange. So the market where securities are traded is known as securities market, and it consists of primary market and secondary market. In primary market, when we are talking about new issue, for example of new issue, you can consider initial public offering of IPO. While we are discussing this one, LIC IPO is in the news. So that is primary market when we are talking about the fresh issue. When the issue is being revolving around the market, then we are talking about the secondary market here, and that is also known as stock market or stock exchange, right? So this is about capital market. Now we'll just discuss about the differences between primary market and secondary market. That is very important for you guys to know. So the basis of difference, the first one is issue of securities. The issue of new share is done by the company in the primary market. So because I'm coming with a fresh issue, so it will be done by the company, not by an individual. While securities in secondary market are traded, and because these securities issue are already being issued in primary market, after being issued in the primary market they are being traded. Let's suppose we are talking about the IPO of any company. So in the IPO of any company, now I have bought that IPO and I have been allotted that IPO. I am the shareholder of that company now. Now I want to sell that shareholder, so I will sell those shares in the stock market. So that is the one difference. Second, the price. So the price is fixed as it decided by the issuing company in primary market. While we are talking about secondary market, price here is dependent upon the fluctuating demand and supply forces. Third is the saleability. The securities which are once sold in primary market cannot be sold there again because it's a one time affair. While we're talking about secondary market, the securities can be sold unlimited times, right? Lastly, the parties in action. The parties to deal in this market are companies and investors. The parties in secondary market are only investors. So these are all the differences, basic differences between primary and secondary market. I hope everyone is clear till now with what we are discussing and what you guys have to cover, right? Now we'll talk about what is the difference between money market and capital market. Money market is different from capital market as it is a place for short-term lending, borrowing typically within a year, whereas capital market refers to stock market. The capital market you can also call it as stock market, trading in shares and bonds of company on recognized stock exchange. Individual players like me and you cannot invest in money market as the value of investment is large, whereas in capital market anyone can make investment through a broker or through the apps. Stock market is associated with high risk and return. We can say that in capital market there is high risk reward, and stock market is also associated with that, whereas money market is more secure. Money market deals are transacted through phone or electronic system, wherein capital market is done through recognized stock exchange. So these are the basic differences between money market and capital market. I hope everyone who's following the video is pretty much clear with the differences. Now, because that will be all for today's class, and that are the differences between money market and capital market. I hope everyone who has watched this video till the end is pretty much clear with what is the difference between money market and capital market. So, thank you for watching this video till the end. And if you're liking the content that we are making, do leave a like and share the videos with all those UGC NET aspirants, those who, with your friends and all those aspirants who are preparing for UGC NET. And these videos can do wonder for them in their preparation. And if you haven't subscribed the channel till yet, so do subscribe to the channel as well, and do leave a good word about TalentBlazer. And that will be all. And I'll be joining in you in the next video. We'll discuss about something more related to your preparation. So thank you all. We'll meet in the next video.